GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as smooth as a freshly paved road. I'm your host, Jay Hamilton, and today we're joined by Neil Da Silva, former CFO of PayPal Digital Currencies and Remittances, and one of the creators of PayPal's stablecoin, PYUSD. In today's thought-provoking episode, we'll talk about PayPal's crypto strategy now and in the future, why they decided to launch a stablecoin and why they chose Solana. We'll also touch on how regulation is holding back PayPal and other players in the space. And we'll zoom out and look at activity from MasterCard, BlackRock, Stripe, and other major fintech and finance operations and see where this is all headed in the future. Now, before we jump in, I have a very important announcement for our listeners and viewers. As of today, we are switching our publishing time from 9 a.m. EST to 3 p.m. EST. Now, don't worry, you'll still receive your daily dose of alpha. It'll just be a few hours later in the day. Before we jump into today's episode and hear all from Neil, let's just take a minute to hear from our fantastic sponsors over at Kelp DAO. Get ready because your reward farming game is about to level up. Introducing Gain, powered by Kelp, your DGen concierge. Gain is an automated vault launched by Kelp that maximizes rewards for ETH users. It offers one-click access to airdrops and points from leading L2s like Linea, Scroll, Karak, and more. Here's how it works. Head over to milkroad.com/Kelp Gain and spot airdrop Gain. Get a complete overview of how your assets are deployed and the rewards and points you stand to gain. With just a few clicks, deposit ETH, RSETH, or liquid staking tokens into the smart vault. That's it. The best part, once you deposit, you're issued a liquid token, AGETH, enabling you to participate in DeFi on Pendle, Spectra, Lyra, Splice, and others. Gain is already live, and you can go check it out for yourself today. Just head over to milkroad.com/Kelp Gain and get started. Neil, welcome to the Milk Road Show.
Great to be here.
It's fantastic to have you. Now, I want to start by giving everybody a little bit of a history lesson because PayPal's been operating in the crypto space for a while. It started when PayPal first allowed their users, for over 400 million users, to purchase Bitcoin and Ethereum within PayPal. And then PayPal started to allow people to actually on-ramp and off-ramp that crypto. And then you launched your own stablecoin, first on Ethereum and then on Solana. And then even most recently, PayPal integrated with ENS. I believe it was just last week.
Right.
So it's been quite a journey over the past, I believe it all started about four or 5 years ago. Walk us through maybe the short version of PayPal's crypto journey. What were those early meetings like? Why did PayPal decide to build in crypto?
Yeah, I think kind of the right question. I think, ultimately PayPal is customer obsessed. And so when we think about, and I should say the team, thought about PayPal and where it could be over the last several years in crypto, it really was about how do you make payments more affordable? How do you make payments faster? And ultimately, how do you drive global inclusion for people that are today outside of the financial system? And so many of those early meetings really amount to, when you're thinking about innovation at a large company, and this is true at any large company, it is about how are you going to move into a space and how are you going to ultimately learn about it quickly? I've been a founder in my career and spent a lot of time with startups and investing into startups as well. And it really comes down to the best way to do things is learning by doing, and that action produces information. And so you went through the history, Jay, of where we've been in the space. And it really was, let's start with a retail business where we could onboard millions of users and familiarize themselves with it. But likewise, familiarize ourselves. What would it take to host a crypto business in that way? And also critically, and maybe a corrective as well, I don't think a regulation is holding back companies. I think of it as enabling it. Regulators have a very key role. So if we want to drive to 1 billion monthly active users in crypto, regulators, legislators, users, companies, all will play this role together. And so that's how we thought about it at the company.
Yeah, and I think very few companies are better positioned to get us to a billion active users than PayPal, which already has almost 500 million active users right now. Now, I know you're no longer at PayPal and you're in the middle of your next move, but if you could share with us, what is PayPal's overall vision within crypto? What's the strategic direction that they're headed in?
Yeah, listen, I think that the CEO of PayPal has been very clear, as the leadership team, at both kind of in media and various conferences, that ultimately it's about innovation. The payments rails of the industry are, at this point, about 25 years old. It's been a very constant system, and that's allowed some great things over the last, several decades. And PayPal was really there since the beginning of, online and e-commerce. So the vision ultimately, which is really distilled in the stablecoin, is how do you take where payments rails are today, which is kind of replete with many intermediaries and many inefficiencies. And again, by using blockchain, how do you make it faster? How do you make it more affordable? And then in that way, how do you let it not just exist within PayPal and Venmo, its current two consumer apps, but also it is an open loop stablecoin, which is to say users outside of that set of tools can have high brand trust that if they put $1 into the stablecoin, that they will be able to redeem $1 out of it. And so the vision really is, how do you take forward the industry over the next 5 to 10 to 15 years? And by using these new technologies, which are the breakthrough in payments and financial services, how do you bring about just a much more efficient and inclusive system? So that's really the vision. It's been very consistently, stated over the last 2+ years of where these things can take us. And I would say to that end too, what is quite compelling and exciting is seeing other large companies, whether that's BlackRock, whether that's JP Morgan, whether that's Stripe, also similarly understand now the value and promise of blockchain. It's just clearly a technological breakthrough, and how to apply it to traditional payments and financial services.
Yeah, it seems so obvious to those of us that are in the space, and I assume everyone else will catch up. When I was prepping for this episode, I had two sort of thoughts on where I thought PayPal could go. One was what I'm going to pull up on screen right here, and shout out to our friends over at Bankless for being the originators of the DeFi mullet. And that's fintech in the front and DeFi in the back. And PayPal is positioned better than maybe anybody, being one of the leading fintech companies, to operate this plan, to basically bring crypto rails and bring blockchain to the world without them really even knowing that they're using blockchain. So that's one direction that I could see PayPal going, and focusing more on, maybe being a larger exchange, allowing people to borrow and lend crypto assets, but doing it through PayPal's like incredible UX, which is superior to most of the UX that we are currently using on chain. Or the other direction I could see PayPal going is, I could see them going more the base direction and developing an L2 and becoming an ecosystem. Any insights on, is there one or the other that is a focus for PayPal in the long term?
Yeah, I think that the way to think about companies like this is that you innovate, and really the innovation, for large companies, is to launch something in a way that is scalable and robust for hundreds of millions of users. So there's lots of levels of innovation, including the original 0 to 1 movement. But the other one is scale. The other one is, how do you take things and really put it in a global, context? And so to that end, when you talk about kind of the different routes that the company can go in, I think the best way to think about it is simply that you're really, when you do these kind of innovations, you're trying to enter the flow of kind of rapid evolution. And so, I certainly like mullets, and I've worn ones before in my personal life.
No way. No
Yeah,
way.
I'm more
We might have
capable
to
than
get
you
a
guess.
photo of that.
Yeah, I think they've all been burned or destroyed. But what I would say is, I think the central insight you had is a really important one. Consumers don't care, and nor should they, about what's happening in the back end, right? So whether that's done by CeFi, whether that's done by DeFi, whether that's done by kind of large banking partners, those movements of value can occur in lots of different ways from and a different spectrum using blockchain technologies, from kind of pure decentralized blockchain to hybrid versions of it. What matters is the trust, the predictability, and ultimately then the value, right? So when you think about working backwards from the customer, it is, will this customer get faster solutions? Will they be able to move money, in a cross-border way, in a higher trust way? And will they ultimately see that come through in more affordable fees, right? So I think that really this is still such early days, right? So much like Bitcoin, I think was the first killer app of blockchain, stablecoins is the second. And so, Tether right now is obviously very used offshore in crypto trading. Circle is used fundamentally still in crypto trading. This move now to payments, that's where you need to engage developers and develop a developer ecosystem. So PYUSD, has already kicked that off. That's one reason that certainly I was a champion, among others, of Solana, is that they are Tole and team is a great and compelling team, and they have a real developer ecosystem around them. And so I think to just answer that question in brief, I think it can go in several different ways, and it's about letting the stable coin be pulled in a very kind of thoughtful way to where the use is and where it's going to be. The last thing to say is this, and that's why I mentioned that comment about regulators. This all has to be done in a very thoughtful way, not only to maintain the company's brand trust, right? And that's true for any large company, but also to do it in a way that makes sense to the people that really have to look after and think about the public's benefit, right? And so that's why I think regulators and making sure that they're familiar and comfortable along the way is so key. And I think, last thing I'll just say on that, I think that the US has made great progress in the last several years. I know that there's kind of a narrative out there that I don't particularly subscribe to, but I think that the US has allowed for tremendous amounts of innovation. And there's a reason why all the largest tech companies are in the US. So the US is a great enabler of innovation. I think all of us in the industry can continue to ask for kind of continued forward thinking, but they've displayed that already. And I think there's great progress in Europe. There's great progress, in other geos as well. But that's where I think, to answer your question, where this could take us is several different directions. And it's about being ready to do that in a methodical way.
You bring up a point there, which sort of leads into my next question, which is when you think about the usage of PYUSD, the PayPal stablecoin, it brings up the question of really like, why did PayPal decide to launch a stablecoin? I think everybody was very excited when PayPal launched a stablecoin. It was, okay, wow, we have a major fintech that is doing something that we've seen USDC and USDT do successfully. I'm sure there was many reasons for it, but I see two very obvious ones. One is, was PayPal sitting there and saying, oh my gosh, Tether's making billions in profit. Like, this is a massive profit opportunity. But also there is large operational costs to be saved under the hood by using blockchain rails and by using a stablecoin. And as you've said, you could pass those on to the user by reducing their fees. You could pass them on to the merchant. There's so much you could do that. What was the initial major reasons for wanting to launch the stablecoin?
Yeah, no, I think a really great question, and it lets us kind of clear up a misconception about stables generally. You had William, one of the co-founders of Tether on the other week, and he said it as well. Something for everyone to understand. When all of us were pushing forward with stables over the last several years, the yield curve wasn't where it is currently, right? So even when Tether started off, it was not making windfall profits because that's not where rates were. And so therefore, when we all started, whether that's Tether, whether that's, Jeremy at Circle, whether that's then, bringing that into the mainstream at the company, the thing to understand is it wasn't yield because that wasn't where it was at that point. It was quite modest compared to the rates of today. The other side is this, and this is just something I've learned as an entrepreneur. It's good to focus on strategy. It's good to focus on being a public company, it's good to focus on profit. You ultimately have to start with the user. If you focus and laser focus, in fact, on consumers and users and what value you're generating for them, everything follows from there. And so to that point, Jay, you've said it exactly right. What do stables allow large financial services companies to do, asset managers, payments companies? It allows these companies to serve their users with a technology that allows movements of value that are much faster, and time is money, much faster with less intermediary steps and more finality and certainty, creates savings that allow you then to pass that back to users. An example of that is cross-border, right? So if you today are wiring funds from Miami to Medellin, okay, that, and you're sending it to your uncle there, the bottom line is, in the background, that's still going to take 3 days for that money to move, even today. Now, let me step back for a moment. That's still a miracle. I don't want to discount 50 years of progress. That's still amazing, right? But in the background, that's how long it takes. If you think about stables and you also think about imagining kind of rolling that forward where you have banks and regulators and everyone along the chain comfortable, that will be able to take place in 2 to 3 minutes going forward, right? What happens when you can allow for that dramatic increase in speed, which makes it cheaper as well? That's really the value creation that we're talking about, because it lets you serve customers and it lets you serve them in a way that's quicker and more affordable to everyone involved. So it's really the second. Rates are a great thing that lets you generate profit along the way to innovate. That's a great thing, but it's certainly not the end destination.
I want to touch on later to kind of circle back as to what are the possible things that you might be able to do in the future as a result of using a stablecoin like PYUSD. But first, I just want to ask, why Solana? So you first launched the stablecoin on Ethereum, which made a ton of sense. And then you chose to launch on Solana as well. And I found that a very interesting decision, because if I step back and I look at the landscape, USDT and USDC are very much established on Ethereum, but Solana doesn't really have a dominant stablecoin yet. USDT and USDC are there, as well as EURC or EURC. I never know how to say that one, but there seems to be an opportunity on Solana that doesn't exist maybe as much on Ethereum or on other chains. What was the reason for deciding to pick Solana and focus there?
Yeah, so I mean, certainly from our side, so when I was at PayPal, we thought highly of the Solana team, right? Including their commitment to innovation, but also ultimately, if you think about the innovation, their commitment to speed, right? Their transactional throughput. And so beyond seeing a team that was innovative, beyond seeing a team that was really tailor building their chain towards high throughput transactional volume and velocity, you also saw a team that had developed, or rather facilitated, a great and robust developer ecosystem. So in answer to your question, I think really, if I think about, and again, Tether and Circle have played critical roles in the industry to date. If I think about it today, and this might not be entirely fair, but I mean it in the most generous sense, I think fundamentally still to this day, they are enablers of crypto trading, right? And so therefore, that's not a surprise to me, and it shouldn't be a surprise to anyone, that they would be kind of quite strong in Ethereum. That's very different, and that gets to that, what we're talking about kind of just very briefly at the front. What is the big task of crypto today? Is to move from hodlers and to move from traders to actually daily use of crypto. And what is daily use? Daily use is payments, right? It's people in the background. They don't need to think to themselves, I need a stable coin. All they need to think is, this app is making it easier in my life, right? I can do things that I wasn't able to do before. And so I think that Solana and other chains that are really focused on high transaction volume, low transaction fees, that's going to allow for daily life versus kind of the bigger blocks and chunkiness and lumpiness that you can get by on with in the trading environment. Does that answer make sense?
Yeah, completely. And I think what's so true about what you're saying is payments is the big thing. I mean, really, if you, if you look back at Satoshi's white paper, payments was the initial idea for Bitcoin.
100%.
Now, obviously, Bitcoin has not become payments and should never be payments. It's a fantastic store of value. Is, as you said, it was the first winning home run use case in crypto. But stable coins thankfully came along and said, okay, we're actually going to solve the payments problem. We'll let Bitcoin be a store of value. And stable coins are definitely going to solve that. It's just, it's going to take time, as you're
Hmm.
saying, because we have to bring so many users on board. What are the things that need to happen in order for us to get to that point where we do have a billion people, sending money to their uncle overseas or doing whatever, whether it be remittances or whether it just be buying coffee? And
Yeah,
I guess, how long do you think we are from that realistically?
I love the question because I think that one of the most compelling things about crypto and blockchain is that we can actually see that there has been progress over 5 years, over 10 years, over near 15 years, right? And that's a great thing to actually see that not only does it have a $1 trillion plus kind of market cap and now even beyond that, but that it's being used in new ways, right? I think that there has been this record of progress. It's not a fad, right? And if it is a fad, very few fads last 15 years. And so when I think about the future, I think the thing to think about is this is a sea change, that this is going to take place in fits and starts. There's going to be more crypto winters ahead. It's always that case. But it's about at every level as we go through, are we ratcheting up to another level of use? And so when you ask what kind of the realistic timeline is, I think that there will be progress within a 1 to 2 year window. But also, I think it's something that we will see because it's the underlying infrastructure for the financial system, which is the opportunity, meaning to refresh it. That's going to take 5 years. It's going to take 10 years. But also, when we think about why we're doing all this work, we all want to do good things. It's something where if you think about anything else in terms of innovation, there's very few of them where you can think, if I keep working on this, if I keep contributing to this space, if I keep interested in it, I could imagine 10 years from now, 20 years from now, the ubiquity of these technologies because it makes so much sense. And you're seeing at every level, right? So before PayPal, I was the trading CFO at Galaxy with Mike Novogratz, right? And so when I was there, it was really a privilege to see that team because they had all come from TradFi institutions. And this Galaxy at that time, this was before Coinbase came public, so it was really the only public company in crypto of note. And seeing how much they had to educate the space, how much they had to spend time with hedge fund investors or insurance companies or asset managers, and seeing that role of carrying the flame, carrying the fire for crypto. That's really where we're going to keep being. But now you see again JP Morgan working on these things. You see BlackRock, and all of these things are going to add up because they have added up. They're accumulating. And so if I think about what's ahead, I think about it as a long journey where there will be wins in the short term, there will be some setbacks, but that the trend line has been so incredibly consistent over time. And that's why, as you know, Jay, we can often use logarithmic scales in
I
crypto
was
because,
just going to say log.
right, the log scale in crypto, that sometimes can be a marketing tool, but it's also been accurate, right? The
Mhm.
log scale has worked every time you're talking about these 10x's. And that's what's so compelling. So if we're going to break through, and I know that we are, to a billion monthly active users, it's about this era of institutional large cap companies bringing it into its technologies, bringing it into its products. And again, it doesn't have to be a button that says use blockchain. It can
Mhm.
simply be the empowering infrastructure and technology behind these things over time.
Mhm. Yeah, that's a great point. There will never be a button that says use blockchain. The same way there's not a button that says use internet protocol or use
You got it.
STMP for email. Like nobody knows the protocols that are behind all these tech. We just use them. I want to move over to regulation because you brought up an interesting point already around your views around regulation. And I just want to understand, I think my main question is like, what regulation do we need in order to do the things that are possible to do? Because when I look at it, I see, as we discussed earlier, there is a lot of benefits that could be passed on to users as a result of the PYUSD stablecoin. One of the most obvious things is some stablecoins now, Mountain Protocol being one, USDM, is offering native yield to their holders just by holding that stablecoin. Now, my guess is that regulation probably does not allow some PYUSD to do something like that in the US. What kind of regulation do you think that we need in order to do these types of things, or whatever you think we can do in the future that will benefit users?
I think it's a good point you bring up. So let me say broadly, I'll defer to my former business partners at PayPal to
Mhm.
speak to where they want to take the product in terms of those economics and the like. But I would say this, which is I think the most important point. If you think about blockchain as driving daily use and innovation, daily use, pardon me, and that participation and engagement with payments and movements of financial value and everything that kind of underlays the system today, I don't want us as an industry to get overly stopped and caught up with sharing of yield, because again, this is a moment in time, right?
Mhm.
Where rates are at this particular point, right? And I think if I really think about what's going to take crypto forward, crypto's had this really interesting journey so far, but it's moving away from the notions of crypto, moving past, moving beyond, supplanting. Crypto is simply a trading asset, right? And crypto is a source of kind of speculative interest
Mhm.
to
Mhm.
use. And so therefore, Jay, what I would say to you is users want to use payments and they're not really thinking about yield day to day, right? Like if you are buying something, if you're buying a coffee, do you
Mhm.
think, am I getting yield when I buy coffee? You don't. You think about
Mhm.
it as I can do a tap and leave. And right now, PayPal and other payments companies offer that. But
Mhm.
again, if you can do with a tap and you can do other things like that cross border, right? That's where it needs to take to. So I would just say for myself, when I think about regulation and the like, when you try to understand large companies, I think the way to understand it is they are interacting and they are collaborating, they're partnering, they're learning from and trying to educate. It's a bi-directional journey and dialogue about the core things that their products do. And the core
Mhm.
things that these products do are not crypto trading and crypto speculation and those kind of
Mhm.
yield. It's about allowing daily use in daily life. So when I think about, so then to answer your question about regulation, I think it's about regulatory clarity more than anything else, right? There's going to be different building blocks that are important to different companies, and that's a very complex and a very involved process, of course. But I think it's about building on, and again, I'm going to sound a positive note because I have a high degree of respect for regulators, especially the ones that we've worked with over time. It's about taking the good actions they've already taken, taking the momentum of what they've already done, taking what they've already allowed, right? Ultimately, look at who is large companies that are participating in crypto today. That's not just an achievement of those companies, it's an achievement of the regulators as well to allow companies that are world famous and world renowned to participate in this frontier market, right? So I think it's about further clarity in the US. It's about taking a page from where Europe has been, which has been kind of quite compelling, seeing what Singapore is doing as well, and then building on that. That's what's really going to allow for this daily use. Because ultimately, if you think about daily use and think about the financial system today, it's everyone along that chain has to be comfortable, and their regulators have to be comfortable with holding different forms of blockchain facilitated value. And that's going to be a multi-year lift. One analogy I'll give you, is I think a lot about stables, the way I think about Tesla, right? You have to first have the breakthrough of not so much just an electric vehicle, but an electric vehicle that reaches scale, like it's available to everyday consumers, right? And so I do think there's an analogy to that and onshore dollar denominated stables. Like that's been the journey of the last several years, is taking an exotic technology, blockchain, and bringing it to everyday users. There's a second part though too, which is you have to create the charging station network, right? That's how the Tesla has value out in the market, is that kind of tremendous network of usability. That's where we are with stables in part two. We've now brought this to the mainstream. And then the next step is kind of domestically and internationally. How do you let stables flow freely and make it a simple matter for different traditional institutions to take it on and use it, which allows for all of retail users to then use it because they're sitting on top of that? How do you make that a very straightforward process? And so getting back to your question, that's why it's a 2-year, 5-year, 10-year lift. This is about refreshing an entire financial system.
Mm-hmm. Yeah, you bring up a refreshing viewpoint there. Just realized I repeated your word refreshing, but you do bring up a refreshing viewpoint, which is, I think, it's very easy for all of us in the space every day to really see speculation as the primary use case for blockchain, and to kind of lose the forest through the trees when we look at that and forget that there is an entire world of billions of humans out there that will not use blockchain for speculative purposes. They will
Yeah.
just use it because it is a better form of payment or transaction, and they won't care about the speculation. And so I think it is important to remember that, because that is the long-term vision of this. And that alone, we would win. That
Yeah.
alone, the whole world would benefit. Everybody, we talk about the 3 billion people globally that are unbanked, like allowing them to access the financial system, allowing them to access simply being able to send money around the world without having to use Western Union, pay 20% fees or whatever their fees are. Like that is a big win for us. I want to zoom out even further. So,
And Jay, sorry, could I add one
go
thing
ahead.
there? Because
Yeah.
I do believe it takes a village and it takes an ecosystem. I want to be very clear on this comment. I am strongly in support of people trading in and out of crypto, right? I mean, I was the trading CFO of Galaxy, so I believe in it. Here's what I'd say. We should open up the aperture to consider where all the value is coming from in crypto. And to your point, and the point I was making too, it should also be about daily use and kind of vanilla use cases of crypto as well. But here's the connective tissue beyond not just supporting people trading in crypto and at times considering it a speculative investment as well. Think also about where will the speculative value of crypto come from, right? How will all those coins and tokens go up in value? It's by having use, right? So in other words, these things are connected. So if people want to go in and out of crypto, you also need to see those tokens being used as the infrastructure of daily life, right? And so that's where these things connect, is that if we only focus on yield but not the actual use of stable coins, then we're kind of missing the forest that are in the trees. But likewise, if we think about any of the chains that stables are on, those chains will rise in value if they are being utilized by very daily use cases, right? So that's where these things connect. We are all linked in wanting to see daily use go up, because that's what the driver of so many different forms of value, which we can participate in and different people will participate in. But it is a village in that sense. A lot of people in crypto together will a rising tide generate.
Yeah. Yeah, I completely agree. Let's look at PayPal's not the only player that's been active in the space from the fintech TradFi world. We've got MasterCard and Visa quite active in the space. We've got BlackRock really active in the space. Shout out to Larry for really getting on CNBC and making sure he educates the whole world. Stripe and many others. When you zoom out, where do you think we're headed in this cycle?
Yeah, that's the right question. I would say it this way. I think now, having been through, like you, several crypto winters at this point, each kind of cycle has different kind of characteristics. I think now that Bitcoin has been, I think, broadly assessed as a genuine store of value that has a high possibility of Lindy, right? That it will benefit hodlers over the long term. And it's not, again, a fad. I think now that we've also seen other kind of, world computer chains also prove their value as well, right? And also some initial experiments in that regard too. Initial that acquired some size, whether those are NFTs or the like, and the possibility of tokenization. This next era is going to be defined, in my view, by large companies that can now mainstream blockchain innovations into the financial system, into payments, into asset management. And so all those companies that you cited, I think not all of them will be necessarily using stables. Not all of them will necessarily be doing open loop. It could be permissioned blockchains. But what I really think is the case is we're reaching the escape velocity now of large companies being able to not just connect to Web3, right? Which is, if you think about what MasterCard did with MetaMask recently, it's about allowing kind of Web3 value to be used in daily life. There's something else. It's letting their systems be upgraded to blockchain. And so I think when we think about where we are now, we've gotten the visibility. We've gotten hundreds of millions of users that are holding crypto. But now to get to kind of that billion monthly active users of crypto, which is going to take some time to get there, it's about these large companies letting their platforms be upgraded in that way. I also think, not for nothing, if PayPal, we had over a dozen investments in the crypto space, right? So very active in venture there. You think about other companies that are investing into crypto. What I'd say to crypto entrepreneurs, because having been a founder myself, like there's a lot of kind of natural simpatico there. I want them to succeed. I believe in what they're doing. And if I think about that, I think about it as, in part, it should be them thinking about enterprise use cases, right, of crypto, and how they can allow that to work, whether that's moving value between chains, right, whether that's about security and compliance, whether that's about taking these tokens of value and putting it out into frontier markets, right, so wallets that exist out in frontier markets. That's where I think so much of this next cycle is going to be. We should still be looking at 0 to 1 innovations. We should still be looking at exotic breakthroughs in blockchain and different ways of organizing the world, right? Whether that be in DeFi or in other nooks and crannies. But also, it's about taking this core financial infrastructure and updating it and upgrading it. And how can startups, how can innovators participate in that and enable these large companies to onboard the daily and monthly active users that we need to take this space forward.
Yeah, it's so true. I mean, we talk about a billion users. I feel like a broken record. I've been podcasting for 3 years, and I've probably titled many of our episodes "The Path to a Billion Users" over and over again. But we hit an all-time high for monthly active users last month. Each month we hit an all-time high right now, and last month was 60 million. Only 60 million
That's right.
monthly active users. We still got a long way to go. And as you said, in order to do that, we need more entrepreneurs doing the less exotic stuff and doing a little bit of the more vanilla businesses that we just really need those basics right now. And yeah, so Neil, where can people reach out to you? Where can they learn more about you if they want to follow you across the internet?
Yeah, listen, I think that I'm on Twitter, I'm on LinkedIn, all the normal stations. Telegram, you'll have to ping me to get that. But what I'd say, look, broadly is this: like, I've now been in crypto for over a half decade. It is one of the most compelling spaces out there. This is an incredible and wonderful community, and vibrant, and like filled with so much high hopes and technical prowess and entrepreneurial grit. And so, it's been a privilege to have been at Galaxy at this kind of at its critical moment in the industry, and being at PayPal as well. And so now, I'm spending a lot of time with the entrepreneurs who are going to define this next wave, right? And so I'd say people should, feel free to reach out to me. Like, this is the pleasure and the privilege of being in crypto, is being around people that want to change the world. And so, and likewise, really, I have to pass the compliment back to you and your team as well, which I'd said off camera too. Like, education in crypto is one of the key things that we all need to commit to. It's about bringing people along. And so I really salute the work you're doing at Milk Road as well, because that's how we're going to take it from 60 million MAUs to 100 million to 500 to a billion and so on. We have to let people get comfortable with it. We have to build technologies that people want to use, and we have to support the companies and teams that are mainstreaming these really important technologies to human freedom and human benefit.
Mm-hmm. Neil, thank you so much thanks for the kind words, and thank you for your time today and everything you've done in the space. Everybody, thank you so much for listening in. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.